Alrighty, traders. This is Blake Morrow. You are listening to the Face webinar. I want to welcome you guys. So let me go ahead and take over the screen here. So today is non-farm payroll day, and as you guys know, this is going to be a probably a actually I got a lot to talk about today. It's probably going to be a fairly volatile day. We have some things that are developing that I think are really important ahead of the jobs report. But let's talk about the jobs report and talk about some of the expectations. Okay, so let's pull up the data here. So if you look at Thursday, here we go. I went to Friday because today feels like a Friday, even though it's only a Thursday. Okay, so if you're looking for the jobs numbers, we are looking to create, well, this says 3.09 thousand or 3.3 million, basically 3.01 million jobs, all right, via investing.com. If you look at Bloomberg, we're actually looking to create 3.05 million. So just over, well, wait, hold on. Yeah, just 3 million, roughly 3 million. So, you know, a bounce back in the jobs report, everybody's expecting that. That's already known. And you can see that if you look at the stock market is higher today. Okay, and actually the dollar is weaker. So you got the S&P that's breaking out. We talked about, you know, the S&P breaking out yesterday. We held the breakout point, and you know, here we go. So, sorry, and it just, you know, you know what it is. I always tell you guys, it's like in the morning, I like yawn. So, so anyway. So the equity markets continue to break higher. The euro is testing the flag resistance, which above 113 is going to be extremely bullish. You've got the Aussie dollar, which is breaking higher, just like the S&P. You know, the correlations are there. The Kiwi. Now, I want to talk a little bit about the Kiwi. We were just talking about it in our chat room, and the New Zealand dollar is breaking the 65-cent level, which was a big level resistance you know, which was the wedge resistance going into yesterday. So now that we've broken above 65 cents, we're now approaching 65.30. Obviously, the Kiwi's pretty bullish here. Chi in our chat room, he brought up the weekly chart and he said, look, the weekly chart, we're right up against resistance, right? We are right up against resistance, which we are. We're about 20 pips away. And so the thing is now we're pushing up against this, you know, really key resistance level, which from a risk reward perspective, it makes sense to short it here because it just does. I mean, it's the risk reward is, you know, hey, you short here, it's rejected every single time for the last, you know, 6 years. So why not today? Why won't it today? Right? That makes sense, although I don't know if I really want to do that. The reason why is if equity markets continue to break out, then the dollar is going to stay weak. Okay, and so if the dollar continues to stay weak, the Kiwi, the Aussie, you know, are all currencies that could continue to rally, and the euro and the cable. Okay, so they all are set up, you know, to move. Now, let me share something with you, a couple other things with you about the Kiwi before you're like, well, it does make sense just to short it here from a risk reward standpoint. So if you look at the DSI, this is the daily sentiment index. This is from last night. You'll notice the Kiwi was at 82, and you got NASDAQ at 93, S&P at 85. Those are getting extreme. NASDAQ is extreme, you know, but the NASDAQ's also at all-time highs. Just want to grab a drink of my coffee. You know, we're nearing all-time highs here, or we're at all-time highs. We continue to blast the all-time highs into NASDAQ. Sentiment's obviously extreme, but it was extreme yesterday at 89. And the day before that at 79. So, or really it wasn't extreme then, but you can see how it was tipping into extremes, and now we are obviously there. So the Kiwi, even though it's 82, it could continue to go higher. So that's one, the DSI. I want to show you something else. So this is the city positioning indicator from from Citibank. This came out on Monday. You'll notice the Kiwi short positioning, okay, this is a week ago. So this would be that would have been the week of the 22nd of June 22nd, right? That was a week ago. Here we are today, or as of Monday, we were there, right? So but the point I'm trying to make here is the market is still short. So if the market's still short, and we could continue to flip to go long, before things moderate. So the reason why I'm pointing this out is because, the Kiwi, if people are still short by Citi's numbers, then we could continue to squeeze. And here's the thing: if we do squeeze, and let's just say, with the DSI so strong, and with stock market a little frothy here, we could theoretically go higher and then come back down and retest, and then reset and then move along. I think that's entirely possible as well. I think if we get to 65.50 today and we reject it, then that's going to be kind of significant going into next week. Let me just say that I think we're right up against some pretty key levels. And so it's going to be tricky. It's going to be extremely tricky at these prices to be long or short. You know what I'm saying? I'd like to see a little bit more confirmation. I'm not really super excited about trading today. I'm going to tell you that right now. I'm sitting here looking at the markets going, do I really want to be involved today? At such we're at such key inflection points on all these currencies. So let's stop and talk about them for a second. And this is what makes it so hard. Okay, you have the euro dollar. You're at flag resistance. Not only are you flag resistance, you're at multi-year trend line resistance since 2018. Yes, we'd made a false breakout above that, a few weeks ago, but we're not backing off. The market is bullish euro, and they're long euros, so that does concern me a little bit. But technically, you can't really ignore the fact that we have a bull flag pattern. So if we get above 113 and we close above 113, it's bullish. Now, what's going to help continue this bullish move with the euro dollar is that you need equities to continue higher. And you just saw what the sentiment index is on stocks. And I question why stocks are even up here, other than volatility is low and everybody's chasing the market. Because if you look at this COVID data that's coming out, it is continuously making higher numbers in a lot of the South, including the place that I live. And is it possible that it starts to reignite, the other, parts of the country that have tapered it somewhat? It is, but I think what it impacts it even more is sentiment. If you get people that are like, I don't even want to go, I don't even want to leave my house, even though it's fine to leave my house. If in different parts of the country, it's starting to get ugly on the other side of the country. It's only inevitable it's going to hit here, and then you get that you know, it's a sentiment driven, you know, okay, I don't want to spend money. I don't want to go out to dinner. I don't want to, you know, buy, you know, take out, whatever. I mean, the thing is, it's gonna limit economic activity, I believe. So that's the things that those are the things that I think about when the market, you know, continues to scream higher. But you can't ignore that it continues to move up. So when it's moving higher, the path of least resistance for the dollar is going to be down. So you get the euro dollar that's, you know, trying to move higher. The cable that is actually at the 50% retracement. You know, we break this resistance here, and we should trade up to 126, the 618, right here. The Aussie dollar is basically in breakout territory. It's really struggling right now. I think the reason why the Aussie is struggling is because if you look at the Aussie New Zealand, it's getting crushed today. So, you know, you got the Aussie that's struggling, but look, as long as that's above 69 cents, it is breaking out, right? Breaks back below 69 cents, then we got a problem. Kiwi. I mean, the Kiwi, as I showed you, it's we talked enough about the Kiwi. I don't need to even go there anymore. You guys should all know that 65.50 is really key resistance, right? Okay. Look, I'm going to come back to the Canadian. Look at the dollar max. This is the chart of the day yesterday, right? You guys had all evening last night to sell it at 22.71 last night. I was awake, but I wanted to go to sleep early, which I did, so I didn't trade the dollar max. But it's up here all night for a couple hours while it was up here in the 70s, you know, before, you know, it fell. I mean, you guys had all day to short that damn thing, but you know, it's coming out of a wedge. Swissy, okay. Read the analysis on the dollar Swiss last night. Yeah, I know all the trend indicators are flat or are flat, but last night a false break, or this is from 2 days ago, a false breakout of the triangle could lead to a move lower if the 94.45 support is broken. Last night was no change in analysis, and you know, that was a false breakout right there. There's also dark cloud cover if you guys don't know your chart candle patterns, which has led to, you know, a breakdown. Now, I always get skeptical trying to buy Swiss francs as they're moving lower, as the pairs are moving lower, just because the, you know, Swiss National Bank could shove that trade up your rear end, you know, at any moment. But it's worth noting. I think it's worth paying attention to that when you have stocks moving higher, but the Swiss franc is strengthening, that's something that's not jiving with me, right? This is what makes today more challenging than most days, especially non-farm. Here's the U.S. dollar Norwegian krone. You know, we're just kind of bouncing around, but we're back below the 200-day moving average. So just pay attention to that. All right, so let's talk a little bit about the Canadian. Now, Canadian jobs report is not today. It's next Friday, right? You've got crude oil, which, you know, I think probably right now is, you know, the time that you really want to short crude. But it's hard to do that ahead of the jobs report, right? I get it. But if I'm sitting here, well, I am sitting here. If you're sitting there, but if you're sitting there wondering, why isn't the dollar Canadian weaker while the dollar is weaker against every other single currency? You got the Aussie breaking out, the Kiwi breaking out. You're not the only one. We're all sitting here looking at the dollar Canadian saying, why is this currency pair? Why is this currency pair not, you know, down below 135 and, you know, challenging, you know, down here? Why are we here? Is, you know, what probably yourself and myself and what everybody else is asking right now. And anybody who's short the dollar Canadian is definitely asking that question. So And the answer is I'm not too sure. But I will tell you this is what I told the guys and gals in the chat room earlier today. If it looks like we got some, I'm sorry, we got some Brexit headlines coming in. Barnier is talking. Hold on really quick. Can you believe agreement is possible? Why was it not possible? Look for the next round of talks. I guess the cable got hit a little bit because of that. All right. Anyway, going back to the Canadian. So I was telling the guys and gals in the chat room a little earlier. If for some reason, the dollar starts to gain strength, and you start to see like the Aussie breaking down, I'm going to get along the dollar Canadian because it's not going down. And what does not go down usually only has one other direction to go, right? Up. So I'm sitting here looking at this particular, pair going, why is it not going down? And I'm not long right now. I was playing it on the long side yesterday. Actually, if you guys remember the daily roundup webinar, I'd played the dollar Canadian long twice yesterday. It's frustrating. It was like kind of, it was frustrating because it was the dollar was weak against everything else. So it's like, the dollar Canadian was just, grudgingly moving higher, but it, did. But looking at it right now, it's like, man, if the dollar for some reason starts to gain some strength, the dollar Canadian is going to rip. So I'm keeping an eye on it just because crazier things have happened, right? Like when I say crazier things have happened, think about like the jobs report. We're looking at jobs right now. Going back to the data. Going back to the data here, right? So we're looking for basically 3 million jobs, right? Let's see if you can see what the chart looks like. It's so ridiculous. Like loss of 20 million jobs. Last month, remember, we were expecting to lose jobs, lose 7 million. We gained, 3 million, and then this month we're expected, to gain jobs too. What if? And by the way, the averages of analysts, I believe. Let me hold on. Let's pull up this jobs report. This right here. No, I don't want the news. Where are all the forecast surveys? Low estimate of 500,000, high estimate of 9 million. Okay. For today's number. What's something crazy that could happen today? What's crazy? What's crazy that can happen with the jobs report today? I mean, look, last month we were expected to lose 7 million. We gained 3 million, right? What would be crazy today? We lose jobs, right? Now we're expected to, yeah, or even if the jobs aren't, like, let's say we make 1 million, we create 1 million jobs, but then the jobs revision from last month gets revised down. I mean, if that happens, you would think the dollar would get smacked. You'd be like, oh, that's dollar bearish, but I'd beg to differ. I think that's dollar bullish, especially against the Canadian. I think we'd see risk aversion, and then we'd see like the dollar Canadian just rip higher, and we'd see the Aussie dollar break back below 69 cents. Is that going to happen? Chances of that happening are probably pretty slim. But we live in crazy times. If you would ask, you would have asked me a year ago, what's the chances of us having a pandemic in 2020 at the turn of the decade, I would have said, slim to none, probably zero chance of that happening, right? So, again, you got to think about what isn't the market expecting. The market is expecting the jobs number to be good. We're going to create 3 million jobs. We're probably everybody's going to be watching the continuing claims a little bit closer, actually. But everybody's going to be watching like the headline number. Everybody's expecting stocks to continue higher. Everybody's expecting the VIX to continue to trade below 30 and continue to drop, right? Everybody's looking for volatility to continue to drift lower. Everybody's expecting the dollar to continue to stay weak, right? So, what's an outlier? An outlier is if something crazy happens. So I need to be prepared for that. You need to be prepared for that. So if we're sitting here and we're like, holy cow, that is not what the market wanted, then what do you do? And for me, I'll probably be long the dollar Canadian, and I'll probably be shorting the Aussie dollar. And other than that, today I would just expect that today what happens is, and by the way, in the euro, there's a huge option. Let me see if I can find it for you. Give me 1 second. Pulling it up now. 112.50, 2.4 billion of options expiring today. So the reason why I tell you that is because that's going to act like a little bit of a magnet for the euro. So it could, I'm not saying it will, it could. So, what we could see, following the jobs report, strong number, euro dips like this, then find some support, right? That's what I think is more realistic to happen for today, is that strong jobs number, the jolt to the euro is back down to 112.50. There's going to be a lot of buyers down there because of the huge options that are expiring. And then, then my bounce, and then we're going to flutter going into the remainder of the week. But look, Aussie's still in breakout territory. Kiwi's still in breakout territory. Dollar Canadian's that outlier, right? Dollar Mexican peso breaking down. I didn't even talk about the yen just because I'm so uninterested in the yen right now. But 618 retracements, big resistance, big supports at 106. Get me to 108.50. Get me to 106, and I might be interested in the pair again. Not really interested right now. And so. So anyway, I hope you guys found this analysis helpful ahead of the jobs report. We have Andre's going to be coming in today. Steve it should be here, and I think Stelios is here as well. Good morning, guys.
Good morning, mate. I don't see Stelios yet.
Hello, everyone.
Hey, and Andre's here too. So we got Andre, we got Stelios, and we got Steve. Wait,
I don't see him yet.
Oh, okay. He may or may not be here, but we got Andre, which is great. And how you doing, Steve? I know your back's bothering you a little bit. So other than that, how are you doing?
Everything's okay. How have you been?
Good. I don't know if you caught my analysis of what we're looking at today. It's kind of tricky, where we're currently at.
Yes, I was here. I think that from a technical perspective, everything points to a risk on following NFPs.
Yeah.
And since the market is really not focused that much actually on data, because the market seems to think that bad data just means that the Fed is going to have our back for longer.
Yeah.
I think that more or less, unless we see any, like, out of this planet outliers as a print, I think that the market is probably going to follow the path that it seems to want to follow at the moment.
Yeah, I mean, look, I look at the S&P and it's, I mean, it
Yeah, I
looks
mean, it
bullish.
just wants it, right?
Yeah, I mean, yeah, it's like what, it's like
Same with crude, with Aussie, and the vast majority of the risk correlated financial markets.
yeah, and it doesn't make a lot of sense, but it's continuing, and I mean, I also have to imagine that, the the COVID crisis is really a United States crisis right now. It's not a crisis anywhere else in the world, which, I would think.
That's not exactly
Well,
true. I
they're
mean,
right, right. I mean, it is, it's southern hemisphere. It's affecting, Brazil and Mexico, obviously.
yeah,
But it's definitely,
those have big problems, but even the rest of the countries, it's not like, everything is 100% back to normal, not in the vast majority of the countries. And, it's also the huge danger that is looming. Okay, I mean, things are better during summertime. We more or less expected that. I mean, during summertime, you have a lot less people that have the cold or that, are, a little bit sick, which makes a
right.
huge difference because you're going to be sneezing, you're going to be coughing, which increases transmission rate, by a lot.
Yeah. Oh, I know.
So
I mean, it's definitely, but it's not the heat that keeps it away. I live where it's very
yeah,
blistering hot outside,
it's
so
not on its
just
own, but yeah, but good weather
yeah,
helps reduce transmission rate. Of course, if you do your best to have
yeah,
transmission, you know what I mean. You're
right.
gonna make it happen.
Right. Well, hey, anyway, Steve, I'm going to pass it over to you and Andre ahead of the jobs report, because I've actually got to focus on the jobs report over here. Do you have it, or do you need help with through this?
Absolutely, I'm fine, mate.
Okay, and then you got Andre there, who's gonna take us all through actually some of these charts, and I'll probably pipe in a little bit, just to let you know if there's anything that stands out that I'm seeing. All right.
Yeah, absolutely, absolutely.
All right, guys. Hey, good luck today, everybody,
To you as well.
and for those of you that are always supporting ForexAnalytix, thank you so much. I really appreciate it, and so does the rest of the team. And for those of you that haven't tried us out, remember it's only $1 for 10 days to be part of our community to try it out. So, Steve, it's all yours, and Andre, thanks for joining us today. And you guys stick around because
Thank you.
Andre is going to give you, a look as far as harmonics and how a lot of the harmonic patterns that are developing in the markets that he sees. So, and he's our resident harmonic trader. So, thank you.
Thank you, Blake. And needless to say, visit Forest Park FX, our sponsor. You can participate either in the cashback or rebate system, depends on where you are. I'm doing it. It's one of the few times that you can really say it's free money. In essence, you just get back some of the commissions that brokers take from you. So it's not exactly free money, but definitely you save some of the money you pay. Let's put it like that. So it's something. Now, quite a lot of data coming out. As I said before, I very much doubt that deviation from expectations, unless they are like huge, are going to make much of a difference in my eyes, because we've seen big numbers not make much of a difference in the perception of the market, right? Because it's the Fed has our back thing, and they will have our back until data actually start being normal again, no matter how much it takes, how long it takes. So I think the market has more or less made its mind that it wants to go higher, and unless we see something really bad, I think it's probably going to do that. So let's see what we get. Trade balance worse. Non-farm payrolls a lot better than expected. Yeah, so definitely we're going to rally. 4.8 million versus 3 million. Initial jobless claims worse than expected, but I guess the market is not going to care about that because it's going to focus mostly on the US non-farm payrolls change. Unemployment rate quite lower than expected at 11.1%. We're already seeing US stock indices just ripping through resistance, which, if you remember, is exactly what I said I was expecting it to happen here. Let's see what else we have. Manufacturing payrolls better than expected. Canadian trade balance better than expected, quite a lot better actually. That's it actually. So the market is definitely going to focus on the huge bait in the NFPs, 3 million, expected 4.8 million. And let's go on a 4-hour chart and you can see clearly what's happening here. Stock index is 1.2% higher. We seem to be breaking through this. As I said, I think another incremental new high. I was saying the same thing yesterday and the day before yesterday. It was looking to me like another incremental new high is probably in the cards. I guess we're going to find out quite soon if that's the case. I think it's quite likely. Needless to say, with indices getting bid, you should expect the dollar to stay in the defensive. You should expect that currencies, not currency pairs like the Aussie, the Kiwi, the Canadian, and of course some of the exotics are gonna remain decently bid. We already know that the Aussie USD, for example, was in this consolidation, which looks exactly the same as the triangle we have in the S&P. Here's the Kiwi. The Kiwi had already been doing this move pre-data, so it had already been trading above this triangle pre-data. And of course, following this data, I can see no real reason why it should reverse this attempt of a breakout. Of course, if that happens, especially with good data, that would be quite a bearish development, but I don't think that's a very likely scenario. Here is the Aussie yen, had already broken through this consolidation a couple of days ago, and why not continue? Here's the Kiwi yen. My scenario was that perhaps we had one more low before higher, but as it seems, that was like a broader consolidation, something like, I'm assuming, something like this. So it's already now broken to the upside and is making the move. So there we go. So I think that's going to be the name of the game for the rest of the day. Let's see what crude is doing. Let's go to the 4-hour chart. Crude should probably be responding positively. Yes, that's the case so far. Here it is, testing this trend line resistance, more or less lagging just a little bit what the S&P was doing, right, and the Aussie USD. So looks to me like we might have another push higher, as we talked about yesterday, towards 42. It is a likely scenario before we see a deeper pullback. So, that's another market that should benefit from the data as we see stock indices keep pushing higher. Let's see what we have. Let me see what yields are doing. Okay, so yields are actually responding higher, which is more or less normal. So we should have, another rejection here from the 10-year treasuries. We might attack once again this triangle trend line support, following this data or within the next few days. I don't think this is a move we can do intraday. Dollar still holding on to this channel, but looks very heavy to me. And to be, perfectly honest, I said multiple times that this rebound looked absolutely corrective to me. So, logic says that we should break down from it and continue to the downside, perhaps retest this 94.65 spike low that we had in March. let's have a look at the USD yen, although USD yen has become very unreliable with following risk. And here it is, it's doing absolutely nothing. I mean, yields are pushing higher, risk is definitely pushing higher. USD yen is like in hypnosis. So, that's why I've said multiple times, just stay away from even attempting to trade this currency pair until it finally wakes up. I think it's a terrible idea to be losing your money and your time trying to do something with it. Just, let it be. And there are so many other things you can be trading. And, it's not even reliable in any type of correlation anymore. So just, let it be. It's, in my eyes, I mean, there is no clearer signal that it's like, manipulated to basically flatline. I mean, I can't even imagine why else a free floating currency pair would be responding more or less to nothing. So Blake already mentioned, and we said that yesterday as well. I mean, there is no way you could interpret this price action in the Euro USD as impulsive lower. There was a chance that we might have pushed lower once again. That was the most bearish scenario I was seeing here. But as it seems, we're breaking out from where we were. Cable, although it was unexpected, if you had a look at it a couple of days ago, start of Tuesday, if you had a look at it, you would never have guessed that the cable would have made the move first to break through this corrective channel. I had warned, though, that despite it underperforming until then, the Euro USD, I also viewed this pullback in cable corrective as I did in the Euro. It might have been a deeper one, a deeper correction, but it still looked, very orderly and corrective to me. So, nobody would have guessed, but it actually caught up. It broke through and closed above yesterday, and we seem to be reducing some continuation today. Obviously, all that in the expense of the euro pound, right? Because the euro pound, suffered quite a nice reversal after more or less completing the rectangle's extension to the upside, almost tagging the 61.8 to the pip, almost. I mean, we came extremely close. Dale would say close enough for government work. And keep in mind that we're now back testing a confluence of supports, which is this horizontal support area, previous resistance. And, we're just pips away from this ascending channel trendline support as well. So keep in mind, 90 cents key area of support. If you like euro pound for more upside, this is where you buy it. But it breaks through 90 cents. I think being long is going to be a very, very dangerous proposition. So, you really like it to the upside, this is your chance. I have to tell you, though, that I'm not feeling that good about, potentially buying it. I mean, my gut feeling tells me that we've already had, enough of a corrective move higher. And I think that we'll probably penetrate through this 90-cent area. Now, of course, that doesn't mean I'm right, but, I'm telling you what my gut feeling tells me here. It's clearly, good support, but I don't think it's going to hold. Kiwi pushing higher, as you can see here. So, yeah, I mean, following this data, I don't really see a reason why we wouldn't see follow through in this last day of the week, since we're missing a day. Okay, so next upside resistance. Let's start figuring out upside targets. So next upside resistance in the S&P is 3170, and above that we have the 3232 high, and above that we have the 3260 confluence of resistances. Personally, I would want to see that area tagged, because a reversal from there would really trap a lot of people in the wrong side of the market. An incremental new high is going to get people, rushing in. We know that already there is extreme fear of missing out in this market. A lot of people that consider themselves stupid for not buying, the pullback, which I can't blame anybody as stupid for them not buying. I mean, I did actually buy this pullback. I held until 28.50, but fundamentally speaking, the market could have moved a lot lower than that. And, I can't blame anybody that wanted to wait, a lot longer before they wanted to get involved. Now, of course, central banks, in essence, are now the game. They don't indicate the rules of the game. They are the game. So, whatever. So these are upside resistances having to do with upside resistances in FX. I think we're going to be tagging soon enough again this channels. Look at the big channel, the big purple channel here. This channel is resistance once again having to do with the Euro USD. Perhaps next time we're actually going to break through it, and that's going to be quite a big technical development, especially considering that Euro USD is like 58% of the DXY. Inevitably that will also mean a big breakdown for the DXY. Now, next upside resistance for the cable, assuming it passes through 125.50, which is resistance. I think we're going to be retesting the 128.15 high. I mean, I see people aiming, lower to begin with, like 126 or whatever, but I don't see any reason why we shouldn't, move somewhat higher from there at least. Let's see how the metals are responding. Gold, gold actually produced yesterday an outside black candle, which, is a decent reversal candle. But I've told you my opinion about that multiple times before. I've seen people during this bull market that started in the summer of 2018 from 1,150 roughly. I've seen people call the top here in gold more times than I can count, and all of them were wrong. The fundamental backdrop and the environment we're currently in still favors, is extremely favorable for monetary metals. Is gold and silver going to go up? Are they going to continue going up in a straight line without pullbacks? No, absolutely not. But do I think you should be selling them? No, absolutely not. I think you should be buying, any decent pullback we're going to get at some point. We should be buying that and not trying to, pick up pennies in front of the coming train, because that's quite a dangerous game. Now, as support, I think you should be looking for the 1740 area. I think that above 1740 area there is no technical argument to be short. A single candlestick is a very premature and inefficient piece of information. It's not evidence enough. So, a break below 1740 is the very least I would be looking for, in combination with that candlestick reversal, for me to start looking lower. Now, having to do with silver, listen, typically speaking, silver fulfilled its minimum target as well yesterday, because yesterday it did produce a higher high, and it did find resistance in this 1850 area. So theoretically speaking, it has already fulfilled the minimum target of this consolidation. Now, this consolidation, you can either look at it as a triangle, there it is, or as a flag, as I had drawn it before. It's really unimportant which of the two it is, because the trend line resistance remains the same. Now, especially if it's a triangle, a new high and then a reversal would be what you would expect. And as I said, we did get an incremental new high, so might be a short-term high. Let's wait for the week to finish to see how we close on the daily and the weekly charts, and we can reassess. As I said, nothing moves in a straight line. So, pullbacks will happen. Perhaps one is starting in metals. But as I said, it's very dangerous to jump the gun. I'd rather have more evidence, and I'd rather just, wait for any correction to play out and then, buy the pullback. That, at least, that's definitely the way I'm going to be approaching these markets. Now, let's have a look if Aussie is actually finally, Aussie is actually not doing that much. I mean, it is trading above the triangle. Can't say I'm really, ecstatic about how much it's responded higher. What I can tell you as a fact, though, is that, USD NOK, for example, because I just noted the price here, USD NOK seems to be really failing for the bulls. Probably that was the formation. That ended up being the formation. I probably did well for not getting rid of my position. I'm still short, deep in the money. I think we might be seeing new lows here, especially if we see a new high in crude, which is likely. USD SEK still remains within this channel. As long as it's getting rejected from trendline resistance, I think you should definitely not try to be long here. Short makes sense, long doesn't make sense until we can at least clear through 947, I would say. Now, let me briefly go through some of your questions and see if there is anything else we haven't covered. And then I'm going to pass it to Andre to see what he thinks is playing out here from a technical perspective in the medium term. Steve, good morning. Your take on metals before the data. Sorry, too late for that. I just saw your question, Hamed, so doesn't matter anymore. My take, though, wouldn't have been any different. My take would be exactly what I told you, that a lot of people are trying to call the top in metals. They've been consistently wrong. So before you call a high, just wait for more evidence, because this remains an excellent environment for monetary metals. Okay. If the DXY is down, why gold is not? What do you mean? If they have any relationship, it's an inverse one. I mean, everything else remaining the same, when the DXY goes up, the dollar should be going down, and not the opposite. So okay, now you said if the DXY is down, why the gold is not going up? Because as I was explaining yesterday, it wasn't exactly this question. It was somebody asked, in essence, indirectly, what the correlation is between crude and gold, because they thought that they should be moving together. And I explained that gold and crude oil have factors that affect them outside of what the dollar does. Obviously, since when we're looking at gold denominated in dollars, obviously the path of the dollar is going to play a role in what gold denominated in dollars does, unquestionably. But that's not the only thing that moves gold. So yes, you can have gold and the dollar climbing at the same time. For example, that usually happens when there is a lot of uncertainty in the markets, when there is a lot of fear in the markets. Why? Because the market perceives both of them to be safe havens. And between the two of them, it perceives gold as being the strongest safe haven. So when the market participants want to rush in protecting their assets, they're going to both be buying gold and dollars, but usually they're going to be buying more gold. So, enough for gold denominated in dollars to, in essence, be able to counteract the dollar strength and climb despite it. Okay. And the opposite can happen as well. You can have both of them dropping at the same time. So, I mean, is there a correlation? Yes, in general there is. But keep in mind that what the dollar does is just acting either as a headwind or as a tailwind. Now, airplanes also always have some kind of a wind, right? It doesn't mean that if you had a headwind, the plane cannot fly forward. It just means that its airspeed is going to be higher than its ground speed. So think of it like that from a physics perspective. And if you have a tailwind, your ground speed is going to be higher than your airspeed. Okay, so think of it like that. So I don't think you should be trading any of the dollar-denominated commodities just based on what the dollar does. Probably not a good idea. Hi, this is Austin. Is the best time to trade? What is the best time to trade? There's no answer to that. Europe, I would say late European session and the US session is probably the best time to trade on average, because there are periods of time that Asia might be very active, but I would say that, most of the times I would say that, these are the hours. But on the other hand, to be fair, depends on what kind of trading you do. I know, for example, people that have specific trading strategies that work best when the market is less liquid, for example. So these people might prefer, let's say, trading early Asian session or whatever. I mean,
And still, let me interrupt, because
Absolutely.
eventually, if you trade the specific strategy or a specific pattern, you need to wait for that pattern to form. So regardless the time that you want to trade during the night or during the day or
that is absolutely
Europe,
correct.
you need to wait for the pattern to develop. You need to validate the pattern, and you need to engage a pattern when the pattern forms. So that will depend, as Steve, and just to give my opinion, as Steve was mentioning, so it will depend the strategy you use and the patterns that you decide to trade, because you rely on those events to put your money at risk. So I believe that answers also, that complements the Steve.
To answer some, yes, of course, there are Forex options. Yes, there are. Yeah. Okay, so Andre, yes. Since I don't expect, by the way, we are seeing some dollar strength coming through. We're seeing a pullback from the euro. We're seeing a pullback from the pound. I need to stress out here that it doesn't seem to be related with risk, because the S&P is at its highs. We're just seeing some dollar strength coming through. I don't really pay so much attention to it. I think it's just noise. So I don't think much of what we said is changing, and I don't think that we're going to see something surprising today. I think that probably today's data is going to give more fuel to the market to do what it wants to do during the next week. So why don't you go ahead, Andre, and grab the screen and show us what you think is which ones you are looking as decent opportunities where we currently are. Which markets are you focused on at the moment?
Let me try to push my screen. Can I move these to, okay.
We can see gold, by the way.
Gold. Yeah. And because we are actually trading that so-called highs or top for the metals, actually, we have projections there that usually the market will find some pressure. And we are talking about that inverted head and shoulders default projection. So usually when the market achieves those levels, the market feels some pressure there. We don't know what comes from there. You don't know if there will be a massive, deeper pullback from here, but we can try to understand what the price is starting to build, and well, if you want to get involved in a specific direction, you can try to identify those patterns. So basically, gold has nailed the default head and shoulders projection, and it has found some resistance there. So basically, we have our most recent.
So you actually think that we might find some near-term high there?
Very, very not so near term, but actually eventually just for a couple of sessions of bearish momentum or bearish sentiment, because the market is already showing signs of bullish hidden divergence between the most recent lows at the trend line support. So actually the 200 moving average, look, that I decreased my time frame into a 2 hours time frame. So basically the market is already showing some signs of bullish divergence, which I will not, so I will not be surprised with more bullish momentum for the pressures. The level that I will pay attention for gold, I show you before this chart. This will be a monster bearish bat pattern at 1822. So we are not there. We are very close to that price
That's
level.
interesting, actually, that you mentioned it, because at 1823, if I remember right, let me check my chart. I have a confluence of resistance as well. Let me check. Yeah,
1838.
1823. I have it's the 88.6% fib.
Exactly
from the all-time
88%,
high.
Exactly the completion
and
point for the pattern.
It's also the 161.8% extension of
from
the
last swing
pullback.
low. Exactly. So basically, we have a few. Well, if I need to identify a cluster zone or a box to pay attention once the price approaches or enters that box, I will say 1822, 1838. 1838 is actually a bearish shark pattern at extended at 224% extension. So basically, we are now approaching the first Fibonacci extension and pressure level at 1791. So this is the 1/600 extension from the very last swing low. Not the entire momentum, not this entire swing, but the very last swing low. So the one that will help me to identify that shark pattern. So basically, we are trading a pressure zone here.
And let's assume that we don't have to discuss the possibility of finding a high at the second target, because we'll have time to discuss that. But let's assume that was the high that you mentioned there. What would your natural downside targets be?
1721 is my first pressure level, without ignoring obviously the Fibonacci default retracement levels at 38% fee right there at 1743, with the 200 moving average also opposing from below, with me for some pressure, and then the confluence between those golden Fibonacci extension and retracement levels. So basically, this will form the first kind of a shark pattern below. So this will be the first pattern that the market may form below.
Does silver give you the same type of message? I mean, do you have some type of a pattern that is about to trigger in silver?
On silver, basically, I have two ideas to share with you. These weekly charts, which I will not be surprised with the formation of one right shoulder, which implies a retracement or a small sideways moving process.
Yeah, and in order for that to also be a shoulder, it's going to need to take time to have symmetry.
It will take time to get that symmetry. And basically, on a 4 hours time frame chart, we are also trading the 88% fib. But the market has failed one of the criteria to identify the bearish bat pattern. But we are trading the 88% fib. I was expecting a breakout above this kind of triangle there.
We did have a breakout, actually.
And
as you see, we did have an incremental new high. So
theoretically speaking, there's a new high there.
Yeah, theoretically speaking,
above the weekly fractal.
Yeah, so theoretically speaking, we might have, done enough.
Eventually, and a retracement, I always rely on those Fibonacci levels, as you know. So I put a Fibonacci retracement here. So basically, I will expect a retest of the previous structure resistance that may act as a support level or as a pressure level. 38% fib, 1581. So this, if the market decides to break those fractals, the daily and the weekly fractal below, eventually we will see more bearish momentum there.
Since we're talking about metals, and before we go to FX and stocks and everything, you pulled it up. That was what I was about to ask. What do you think about crude?
Crude, technically, basically, as you know, 100% technically, we are approaching also some potential pressure levels. Obviously, as every time I project a BAT pattern, a default BAT pattern, I share also the possibilities above that pattern. So basically, what do we expect at 88% Fibonacci is a huge pressure, which may force the price to retrace. If that fails, there's only one option. The market will trade above the previous structure highs and the starting point of the pattern. So basically, we have two options above that daily fractal. One of them has a false breakout above at 1470. And then if the market fails, the BAT pattern, or both the BAT and the alt BAT pattern above, as I used to say, if the BAT pattern fails you, just grab it, because the market tends to extend to
I
those
remember that.
extension levels. So basically, I will expect, if those levels fail as a pressure level for crude and with that eventual false breakout above, note that we are not trading, not yet, we are not yet trading the bearish BAT pattern completion point. So we are very, very close. I will not be surprised just with a new high above the most recent highs, and then the market starting to retrace from there. But well, let's observe and wait for confirmation. I will not be surprised with more upside momentum for crude for sure. Let's wait and see. We have also, if we need a box above, there's also a major crab pattern extended above at 42.37. So it will take time to reach those levels. Notice is a 1 hour time frame. So eventually a good sequence of bullish momentum may put the price there very, very fast, but that's not what I'm expecting at this point. Let's wait and see how the price will react from the 88% fib or a few points above, sorry, or just a few points above the fractal. As
what do you think about
what
do you think about stock indices? What are your targets?
The stock indices, we are now, I was about to share these, actually I shared these among our subscribers at ForexAnalytix. Two levels of pressure, 3154, so we are trading the golden Fibonacci extension and the completion point of this bearish shark pattern. So this is kind of a perfect ratios for the pattern. We never know if those perfect ratios will offer us the trade that we expect for the pattern, but at least the risk reward for that pattern is very, very interesting, because the pattern don't need a lot of risk to
Let me guess.
work.
Otherwise, we have to grab it, right?
No, this is the shark pattern.
Okay, sorry.
There's two options for the shark. Actually, the shark we can wait for, let's say, a pin bar reversal, eventually even on a daily, if the price enters this box, eventually on a daily, we can wait for a pin bar reversal inside these levels between the 161 and 224 extension, which may offer a decent reverse. But the shark pattern, actually, I tend to project that pattern on both levels. So if it fails at 168 extension, and remember that there were cases where the market fills both the patterns, the market fills the 168 extension, retraces to the 38% fib, and then rallies to the 224 extension again, and then starts to print another retracement from there. It's not the first time that will happen. Actually, that happened quite often. So basically, we are now threatening. Actually, we are breaking and trading above this descending trend line. We are now threatening the daily fractal and nailing the bearish shark pattern at 168 extension. So basically, I expect a decent pullback for S&P from here, and at the same time, if the market at the other time, so if the market fails here,
Speaking
I will
of
not be surprised.
pullbacks, the dollar is pulling back. Actually, it's quite some distance from the highs, but Stocks.
There's a Gartley here.
Stocks so far don't seem to care. One possible explanation, although let me be very, very clear, it's too early to draw any conclusions. One explanation is that the market is going to start thinking that the better data might imply less inflation, and I'm talking about the the old-time traditional definition of inflation, which has to do with money printing and money supply. So might be interpreting this as dollar positive. Now, if that is to be believed, so if it is to be believed that currency traders might be thinking that good data might end up hurting the dollar less than initially expected, people should expect that once stock traders take the hint, they might not like it either. But as I said before, just a temporary pullback doesn't say anything intraday. So I'm just, laying out the.
But do you admit a new high on for the Dixie as an example for above 97.80?
I think that the dollar index.
It will be strange if that happens, right?
I've started seriously thinking. I mean, I'm very bearish the dollar in the long term. I've been saying that for a couple of years. But I kept thinking that the dollar might surprise everybody and produce a new high before it rolls over and dies. But I have to say that given the really weak reaction higher, given the huge risk-off move that we saw. I mean, yeah, the dollar got bid once we saw in February everything that's risk-related turning lower, but we didn't even produce a new high. I mean, the multi-year high is still the 2017 high. So I have to say that I've started getting very skeptical if the dollar can actually go higher than than what we got in a few months ago. And I think that we might actually just continue lower from here. Of course, not in a straight line or something, but we'll see.
Well, I as you know, I rely on patterns. So basically, I'm waiting for 98.50.
Doesn't this pattern look corrective to you as well?
Of course, of course, unless something happens above 98.50 and the market decides to rally above. But so far, nothing points there. Yeah.
But so far, I'm seeing a move that looks very orderly, very overlapping. It's much slower than the prior move to the downside. So I don't know. I tend to believe that it's going to get resolved to the downside.
I think so. On a long term, I think so. But at this point, and basically, I'm searching for lower time frame events, Steve. At this point,
and I think that's what you should be doing, because this environment is not easy for trends, right?
Not easy at this point at all. What we have here, and it's very interesting to share this, we have a clear bullish hidden divergence at the trend line support, and that's one of the reasons why we are seeing that spike. So we are trading oversold, extremely oversold actually, above that trend line support. There's a nice bounce here for the Dixie. As you mentioned it before, we are also trading this trend line resistance for the euro dollar. Let me also share this another level that we are facing here. This internal 168 extension actually, or very, very close to that level. So basically on a lower scale, actually we have a bearish kind of a shark pattern, or approaching the shark pattern for euro versus dollar at the trend line resistance. So that triggers more, or at least that puts some pressure there. 168 extension for the Aussie, also above the trend line resistance, 224 extension right above. So we are already trading inside that that cluster between the 161 to 24. Also the kiwi facing and completing the bearish shark pattern at 224 extension, 1 hour time frame, that implies or that suggests a retracement again back to the 200 moving average, pointing to the 200 moving average, previous structure resistance. The Australian dollar, a very interesting chart here, and let me show our guests this chart. So basically, it's a sequence of events, and that's what I tend to search for, and that's what I want to share with people, the sequence of events that we can try to identify. This was one eventual three drives pattern which triggers above the monthly fractal resistance. Then I started to project a retracement back to 105.43 with another bullish event there. So basically, then the market suggested, at least in my brain, it has suggested an inverted edge and shoulders. It has failed. It has triggered above. It was triggered above that fractal, but then it has failed, and I started to project one eventual new swing high above. So basically, the market has failed that new swing high that I was expecting here, and basically it has violated this structure or that ascending trend line support. So the higher time frame or this major bearish crab pattern as projected before will target 105.43, so the 38% Fibonacci. So basically, I will not be surprised to see Australian dollar also being pushed to those levels just to fill the default expectation for the crab pattern above. So there were a few events during these last weeks. Also, the Canadian dollar facing a golden Fibonacci, the 61 retracement level, but below this ascending trend line support. So I will not be surprised with more bearish momentum. The NOK, the Norwegian krone, is already trading below this trend line for quite a few time. Also facing the golden Fibonacci retracement. So basically, we're still facing one bullish 2618 setup, or we are trading very, very close to that retracement level, which fills that pattern that the 2618 setup implies. One kind of a symmetrical projection above. So basically, that implies new highs for the Norwegian krone, kind of a symmetrical ABCD pattern. Let's wait for that to develop. Mexican peso already breaking below, but also showing some signs of bullish divergence.
Yeah, I see the same pattern that you showed there. It looks to me like a bearish breakout.
Bearish breakout there. Dollar versus the yen. So I was expecting
dollar versus the yen. Come on.
But let's take this approach, Steve. We are trading above these. Well, I don't want to call it an edge and shoulders or an inverted edge and shoulders because we lost a symmetry for the pattern. It doesn't look. Those are visual patterns, and I tend to search for symmetries between the left and the right shoulder. So
I bet you that for every 10 traders that have traded the USD yen during the past few months, 11 have lost money.
Oh, of course.
Let's move to the next currency pair.
It's not an easy task. But basically, at this point, we are finding the price has found some pressure there. So this is the previous structure resistance, now a support. We have a shark. Well, it's a shark pattern projected at 108. So basically, the shark pattern can extend to the 224 again. So a retest of the weekly fractal above, I will not be surprised. Australian dollar versus the yen now trading above this triangle, I will not be surprised with that bearish pattern, a retest of these highs at 76.30, and and as always, as I project the bat pattern, I start to project also the alt bat pattern and the crab pattern above. So basically, if the bat pattern fails, we will see an extension above. So, but I will not be surprised with a retest of the monthly fractal at 76.54 for the Australian dollar versus the yen.
Since you and Dale have a love for three drive formations, you want to have a look at the Nasdaq.
Nasdaq, let me see. Nasdaq, actually quite a clear chart here.
How is this for a three drive formation?
Yeah, it can. And it is possible, Steve, but a wedge here eventually also. Yeah, but three drives, it's completely possible. So we are now trading
daily RSI is clearly diverging, very clearly.
But we have also clear signs of bullish divergence there, suggesting more bullish momentum. So we have new lows on RSI and higher lows on price. So basically, we have signs of bullish. We have bullish heightened divergence, suggesting more upside momentum or more direction in the more trend for the Nasdaq actually. So it's quite an interesting chart there.
Yeah, it is. I have a nice confluence of resistances at 10,600, which would imply an overthrow of the ascending wedge, which is very usual for ascending wedges. So that's what I'm looking for.
Let me just fit this. Well, if the market fails to find pressure here, my next pressure level will be something like 11.
You should be careful with the FTSE. Somebody's asking about the FTSE. You should be careful because it's clearly much weaker than other indices, and I think the FTSE is soon going to be in trouble.
Also showing nice bullish divergence for FTSE, more bullish momentum.
Yeah, but the rebound looks corrective so far.
It is, but
clearly underperforming, you know, other indices and the way they've rebounded. So I think that
I will not be surprised with a retest or a visit to that 200 moving average, Steve.
No, it can push higher.
RSI retesting the highs.
But I think that once we see a bigger pullback in the other indices, I think that the FTSE is going to probably do worse.
Or a push to the golden fib eventually, if at confluence with well, I will not be surprised with that. Well, one thing is certain: if the price violates this trend line support, that may offer some swing low. So I will not be so certain about. Well, let's wait and see. And the DAX actually push it to the daily fractal. We are also facing the default bearish pattern completion point. Note the bearish sharp pattern above at that same price level has found some pressure, has offered some interesting downside momentum there. Well, 1267 if fail, 13 are above the weekly fractal, above previous structure highs, a false breakout above for the crab pattern for the DAX. So basically, it's quite a strange market at this point, Steve, to decide what to do and to decide where
it is a market torn between fundamental and economic reality, and huge amount of stimulus. So as I was saying the other day, I'm afraid that we might, continue in a period of unclear trends. So
Yeah, more sideways momentum.
yeah,
Eventually, a few spikes
yeah,
to just to catch people attention, and eventually
yeah.
more direction.
I think it's a very, very likely scenario. So people should be nimble and look for targets that are shorter term, because who knows. I did
Yeah.
cover the Kiwi before, Alicia. You want to cover the Kiwi yourself, Andre? I mean, I
Yes.
have the
It's
exact same drawing that you have there.
one thing is certain: we are trading above this descending trend line, acting as a
Exactly.
potential resistance. So the market has found some pressure there quite a few times, with reinforced by the daily fractal there. Then the market has found some pressure there, but it ends up trading above. So basically, we are trading the weekly, or let's say the higher time frame resistance pressure level. And
I think logic says that now that we've broken through this triangle, we should probably first see a higher high before
well,
lower.
Well, first of all, I will wait for a retest of the channel
Yeah,
of
yeah.
the previous
I'm
structure.
with
So
you from a risk reward perspective.
basically that sharp pattern printed at 224 extension, it's suggesting a retracement back to the 38% fib. Basically, note that the default target for the sharp pattern is a few points below the 50% fib. So I will not be surprised to see that retest and eventually a catch of this 200 moving average crossing from below. So basically, I will wait for a retest of this trend line that may offer a nice momentum for bulls. That we need to wait for that to happen. A retest of that trend line and a clear rejection of that trend line, which will act as a support, may offer bullish momentum for the pair. Ultimately, we will retest the weekly fractal above at 65.84. So that's that previous structure highs. I believe I shared these. Yes, I did this bearish output pattern also for the Kiwi. So that the pattern completed at 65.77. So at some point I was expecting a retracement back to the 38% fib. Or am I to say that will not happen and the market will suggest more new highs? I don't know what will happen. What I know is the market didn't feel those expectations until now, and trading above the weekly fractal will invalidate the pattern. That major output pattern printed there, that will invalidate above the weekly fractal, which will open the door for more upside momentum with the major or the monthly fractal support printed at 67.55. So that may offer that, let's say, a rejection of this trend line as resistance or as a support actually may offer a retest of the weekly and then of the monthly fractals above. So obviously, that's if the market decides to recover the structure, the previous structure, this channel, eventually it will be forced to trade lower at this point, and going into a lower time frame. And if you were searching for an opportunity to trade lower or to short the Kiwi, this is eventually one of the best opportunities to trade it, because this is the shark pattern which requires, when printed at 224 extension, it requires actually a very, very tiny risk for the pattern to work. And then we need to manage your trade during that process. Eventually you can maximize your profits with a lower time frame event and taking advantage from an higher time frame event. So let's wait and see. Well, Steve,
Thank you very
I
much,
don't know what
Andre.
to say at this point.
It was nice having you to to finish up the week. We don't have a webinar tomorrow, obviously. On Monday, we're going to be here again, and Dale is going to be with us. By the way, coincidentally, Dale just made it home from the hospital. Everything went fine. As we had said, he just had a routine operation, but you never know. I mean, an operation is always an operation. So I'm just letting you know that he's absolutely fine, and he'll be with us on Monday.
Nice.
So, enjoy the extended weekend, and Dale would say, don't just count your pips, count your blessings.
Exactly.
See you all on Monday.
You too. Thank you very much.